everybody. Welcome to today's fundamentals. Hello, Peter.
Hello.
Peter, a new day, a new week. What's up in the FX market?
Well, we had the US dollar, which maintained its sideways motion on Monday. I would note that there wasn't much volatility at the start of the week yesterday, actually. I expect mostly fundamentals to be leading the US dollar into the week. We had, on a fundamental level, say, for example, the banking crisis in the US about regional banks actually having some problems with liquidity. I would also note that we had a survey yesterday which exactly showed that the credit conditions may not be as gloomy as initially feared. So that was a little bit on the positive side and improved the market sentiment. On the other hand, though, we have extensive market worries for a possible default of the US government. Now, the issue is high on the agenda. A possible rise of the debt ceiling could resolve the issue, but negotiations between the White House and US Congress seem not to be so fruitful, up until now at least. I think that as the X-date nears, then the pressure is rising, and we may see the two sides compromising on a solution. But for the time being, it's still an issue with high stakes, which could create substantial volatility for the markets. The third fundamental issue would be the Fed's intentions. The market expects the bank to remain on hold throughout the summer and start cutting rates on September. I would note, though, that the tight US employment market, as shown also by the US employment report for April on Friday, and with the fact that we have still US CPI rates which are rather high, definitely higher than the Fed's target, may allow the Fed to maintain a more hawkish approach. I wouldn't be surprised to see the bank maintaining rates on hold throughout the year. But regarding the US CPI rates, I would be highlighting that the market is starting to reposition itself ahead of the CPI rates for April, which are due out tomorrow. So we may see some market reaction there as well. Other than that, in the FX market in general, I would be noting the release of China's trade data for April. We had an improvement, a widening of the trade surplus of over $90 billion US. I would note, though, that we had a slowdown of the export growth rate and a contraction, if I'm correct, of the import growth rate, which is kind of worrying. Because on the one hand, on the surface, okay, the trade surplus widened, which was a positive. But on the other hand, the slowdown of the export growth rate and the import growth rate tends to imply economic activity slowdown for the Chinese manufacturing sector. And that's, in my opinion, the main story behind the trade data which were released during today's Asian session. Other than that, I would be also highlighting the Turkish lira. We had the Turkish lira, which reached a new record high against the US dollar, actually a new record low against the US dollar. And we have to bear in mind here that Turkey is nearing a rather critical phase as we have elections on Sunday and 2 Sundays after that again. So practically we may see some political instability in Turkey, which may weaken the lira further.
And how about US stock markets?
US stock markets sent mixed signals yesterday. I would note that from US stock markets, besides the fundamental issues we have already mentioned, we have also the earnings releases, which tend to puzzle traders. We had yesterday from PayPal the earnings report, which showed that the company had a better earnings per share profitability and a better revenue than expected. Nevertheless, it dropped if compared to Q4, but was better than expected for Q1. May provide some support for PayPal's share price today, as it was released in the aftermarket hours. Today I would be noting Airbnb. It's a very interesting company. Overall, I would note that the majority of high-profile companies have already released their reports, so we may see the interest still being there as we still have earnings reports, but being more subdued.
And are oil prices still correcting higher?
Actually, they were yesterday. We had a second day of gains for oil prices. But during today's Asian session and early European session, there seems to be a slight hesitation of oil traders. And it was characteristic that there was a slight red candlestick. We'll see that later on in the technical analysis as well. But it seems as if the bears may be about to be taking the upper hand, or at least the bulls are easing.
And so, what's in the European session of today's calendar?
Well, we had already from the UK the release of the Halifax house prices. It was characteristic how, on a month-to-month basis, the rate contracted, it dropped into the negatives. That may have been a result mostly of BOE's monetary policy tightening, which in turn practically increased the cost of mortgages and practically may have slowed down demand for houses. So that's an issue. And we note that on Thursday we get BOE's new interest rate decision. The bank is expected to hike rates again. Other than that, I would be noting also we had some comments which were made by ECB's Lane. Overall, ECB policymakers may be leaning a little bit more towards the hawkish side, and that could be providing some support for the euro.
And how about the American session?
Well, there's nothing much actually in the American session. Yet we have a number of speakers from the Fed, and I would be noting Fed Board Governor Jefferson and New York Fed President Williams. Now, should they sound a little bit hawkish, we may see the USD gaining some support. While later on, we're getting also from ECB Isabel Schnabel, board member Schnabel, and she may more or less maintain also a hawkish rhetoric, which could provide some support for the euro. Other than that, near the end of the American session, we're getting from the US the AP weekly crude oil inventories figure. Now, the last reading was of around minus 3.9 million barrels. It was a drawdown. It implied that conditions in the US oil market remained rather tight. Should there be another substantial drawdown, that would mean practically production was not able to meet demand. And conditions in the US oil market remain rather tight, which may provide renewed support for oil prices.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome to the technical analysis part of the presentation for today. Overall, I would be noting that we saw a relative calm market yesterday. And we make a start with the US dollar index. In front of your screens, you have the US dollar index for our chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now we can clearly see how the price action of the US dollar index remained encapsulated between the R1 101.55 and the S1 100.65 in more or less a channel of around 90 pips, maybe even less. So we tend to maintain our bias for the sideways motion to continue between the pre-mentioned levels, especially as long as the price action remains between those two. Note also how the Bollinger Bands have narrowed, exactly highlighting the lack of volatility in the market. I would be noting though that the RSI indicator seems to be rising, and that's interesting. It may imply some slight bullish tendencies. Given that it has placed some slight distance, it's currently at 55.3. Should there be any bullish tendencies for bullish outlook though, we would require the index to rise, break above the 101.55 resistance line, and aim for the 102.45 resistance level. On the other hand, for any given reason, should the bears take over, we may see the US dollar index dropping, breaking the 100.65 support line, and start aiming for the 99.80. Such a movement would allow us also to draw a downward trend line, showing us also the limitations of the possible downward motion. Let's move to Euro USD. Euro USD, which like the US dollar index maintained its sideways motion, and you can see the yellow rectangle, which started around the 11th of April. Let's have a look. 12th of April, okay, and remains between the 1.1075 and the 1.0925. We tend to maintain our bias for the sideways motion to continue within the yellow rectangle, as we have noted yesterday. And we note also the RSI indicator, which has dropped below the reading of 50. It's actually right now at 41.942. May imply some slight bearish tendencies, or if you prefer, reflecting the downward motion over the past 24 hours. But that's nothing convincing. Nevertheless, should the bears take over, if you prefer for a clear-cut bearish outlook, we would require the pair to drop, break the 1.0925 support line, and start aiming for the 1.0760. On the other hand, should the bulls take over, we would expect the price action to rise, break the 1.1075, and start aiming for the 1.1220. Let's have a look at cable GBP USD. GBP USD, which was on the rise yet stabilized, and it's characteristic how the price action has broken the upward trend line, which has been guiding the pair since the 2nd of May. So for the time being, we tend to switch our bullish outlook in favor of a sideways motion of the pair between the R1 1.2770 and the S1 1.2540. Also note how the RSI indicator is running just above the reading of 50. It's actually at 55 right now. So that may also imply a rather indecisive market. It's characteristic how low volatility is. The candlesticks are merely to be seen. They are more likely to near the idea of a dodgy candlestick than anything else. Also note how the Bollinger Bands have narrowed, once again reflecting the low volatility. All of that tends to imply that most probably the sideways motion is to continue. But I wouldn't be surprised to see some sudden volatility due to fundamental reasons. Should the pair find extensive buying orders along its path, we may see it rising, breaking the R1 1.2770, and start aiming for the 1.2980. On the flip side, should the bears take over, we may see the price action of cable dropping, breaking the 1.2540, and start aiming for the 1.2350. USD JPY, slowly but steadily on the rise, but, and it's a big but here, let's discuss a little bit direction. On the one hand, USD JPY may be forming higher chows, but it fails to actually create higher peaks. The pair seems to have hit a ceiling at the R1, 135.15, and I think it's going to be a big issue, which may not allow the bulls to actually take the pair and push it higher towards the R2, 137.75. For the time being, we tend to maintain a bias for the sideways motion to be maintained, possibly just below the reading of the 135.15 resistance line. Sideways motion here. The RSI indicator is running along the reading of 50, also implying rather indecisive market, which could be allowing the sideways motion to be maintained. Should the bears take over, we may see the pair dropping, breaking the 133.55 and start aiming for the 130.40. Mind you that the 133.55 provided support here, was tested extensively here, but not clearly broken, and provided support held its ground here, but also provided resistance once, twice, 3 times here. So it's a pretty interesting level, in my opinion, quite valid and should be taken notice of. On the other hand, the first resistance line, the 135.15, you can see how it provides resistance throughout the past days, actually since Friday, while it also provided resistance here and was aimed for here. Yeah. Should the bulls take over, once again, we expect the price action to break above the 135.15 and start aiming for the 137.75. Should the bears take over, we would expect the pair to drop, break the S1 133.55. I would require this for a clear-cut bearish outlook and start aiming for the 130.40. For the time being, though, our base scenario remains or relies on a continuation of the current sideways motion of the pair. Let's have a look at USD-CHF. Okay, USD-CHF, which seems to be remaining between the 0.8935 resistance line and the 0.8860 support line. We tend to maintain our bias for the sideways motion to continue between the pre-mentioned levels. I would expect that should the bulls take over, and regardless how difficult it may prove to be, note the slight bullish tendencies during today's European session. We may see the pair rising, breaking above the 0.8935 resistance line, and start aiming for the R2 0.9020. Once again, though, given that we have also the RSI indicator, which tends to remain just above the reading of 50, that may imply once again a more indecisive market, which may allow the sideways motion to continue. In a bearish outlook, I would require the pair to drop, break the S1 0.8860, and aim, if not reach, the S2 0.8760. Nothing less. Let's move to the Aussie. Okay, a very interesting chart in the following sense. A, the price action was on the rise, practically supported by an upward trend line, But note how that upward trend line has been broken during today's Asian session, late Asian session. If we drill now to the 1 hour chart to get more detail, seems how it has stopped at the first support line. A level which also provided resistance here, so that's pretty valid. So on the one hand, definitely the bullish movement, the upward movement was interrupted. And now we have to switch our bullish outlook in favor of a sideways motion initially, given that the S1 maintains its strength and the price action remains above it. Should the bulls regain control over the past direction, we may see the Aussie against the US dollar rising, breaking the R1 0.6855. We would definitely require a higher peak than this one. And thus the R1 0.6855 could be the next possible target for the bulls. Higher than that, we also note the 0.7010 resistance level. On the other hand, should the bears be in charge, we may see the price action of AUD USD dropping, breaking the 0.6755 support line, breaking also the second upward trend line which had started to guide the pair on the 2nd of May. And that would allow practically for the pair to start aiming, if not even reaching, the 0.6625 support level. Let's move to USD CAD. Also in sideways motion, interrupting the downward movement of the pair, and for the time being remaining just below the R1 1.34. There is still a residue of a bearish sentiment left in the market, given that the RSI indicator remains near the reading of 32. So it does not distance itself from the bearish area, it remains there. That could provoke practically a renewed selling interest for the pair. Should that be the case, we may see it dropping, breaking the 1.3270 support line, and start aiming for the 1.3145. On the other hand, should the bulls take over, however improbable that may be, but it's still a possibility and it should be covered, we may see the price action of USD CAD being on the rise, breaking the R1 1.34 resistance line, and start aiming for the R2 1.3545. For the time being, though, we tend to maintain, or if you prefer, to switch our bearish outlook in favor of a sideways movement bias, possibly just below the 1.34 resistance line. Let's have a look at the Kiwi. Now this is an interesting pair. On a technical basis, we note that the pair's price action has been dropping since today's Asian session, but the drop may not have been sufficient to change the bullish outlook, at least not yet. And it's interesting how the pair started to correct lower after hitting on the upper Bollinger Band, also on the 0.6360 resistance line. So for the time being, we tend to maintain a bullish outlook, given that we have the 20 moving average, the 50 moving average, and the 100 moving average all pointing upwards. And for a switch from the bullish outlook, I would require a clear-cut break of the upward trend line, guiding the pair since the 27th of April. Let's have a look. Give me a sec. 28th, of April. Okay. A possible break of the upward trend line would be the first signal of a possible interruption of the upward movement. And that would more or less force us to initially switch our bullish outlook in favor of a sideways movement bias between the S1 0.6270 and the R1 0.6360. Small catch here, should the price action actually drop below the S1 0.6270, that may imply a bullish outlook, as then we would be able to actually start forming a downward trend line showing us the limitations of the movement. Should the S1 be broken, then practically the way is paved for the 0.6190. On the flip side, should the bulls maintain control, we may see the price action jumping. We would require for a higher peak, upward movement or bullish outlook, a higher peak than this one. So the price action has to rise, break clearly above the 0.6360, and make its next peak somewhere in the area between the 0.6360 and the 0.6430. So the next possible target for the bulls after the R1 would be the R2 0.6430. Once again, small word of caution, the RSI indicator is still at high levels, implying that there's still some bullish sentiment left, but it's currently at 63. On the other hand, though, it seems to have started to drop after hitting on the reading of 70. So that may imply that the bullish sentiment may be easing somewhat. For the time being, though, we maintain our bullish outlook intact, given also that the upward trend line is intact. Let's have a look at gold. Give me a sec. Okay, we have two interesting elements in my opinion here. For the time being, gold's price was able to jump above the S1 2020 and remained above it. Interestingly enough, we have to note that the price action of gold found support on the S1 during yesterday's Asian session, while today's European movement is practically a dodgy candlestick, exactly highlighting the low volatility for the precious metal. Let's move though to the 1 hour chart. I think that would show us with more precision what's going on here. Note how the level, the 2020, provided support once, twice, 3, 4 times. So it's a pretty valid level. Note also that there is no higher peak. And it's interesting of the low volatility of how small the candlesticks actually are. Back to the 4 hour chart. Should the bulls regain control, I would require the pair to break above the R1 20,050, a higher peak than this one. And the next possible target would be possibly the all-time high, the 2078 support level. On the other hand, should the bears take over, we may see the price action of gold dropping, breaking below the S1 2020, and start aiming for the S2 1990. Let's have a look at Dow Jones. Dow Jones, which seems to be currently testing the S1 33,500. It has just broken below it, but for the time being, for me, it's still a test. I wouldn't switch the role of the S1 from a support line to resistance line. I would require a clear-cut breaking of the S1 before switching into the resistance line. For the time being, we tend to maintain a bias for the sideways motion to be maintained. Note though the slight bearish tendencies of the precious metals price. It's characteristic that the RSI indicator is still very close to the reading of 50, but has started to edge lower. So should that intensify further, should the RSI indicator drop more, that may imply a buildup of bearish sentiment for the index. On the other hand, should the index be on the rise, we may see it breaking the 33,500 support line, now turn to resistance, and start moving for the 34,160 resistance line. A level which provided resistance once, twice, and aimed for here. Okay. Should the bears take over, we may see the price action finally clearly breaking the S1 33,500 and start aiming for the 32,830 support line. I do get it and I do accept that it may be a little bit too extended with a possible mid-level being here. Okay, one could discuss it. Let's have a look. Yeah. While for a bullish outlook, I would require the price action of US 30 Dow Jones to reverse its slightly downward direction and break the R1 34,160, a level which signifies the peaks once and twice. And in that case, we may see it start aiming for the R2 34,920. Okay, let's move now to S&P 500 in a very similar motion. Stabilized and dropping during today's European session. It seems that market worries may have started to make their presence felt and may be weakening the case for a more risk-on approach. On the contrary, maybe advising some caution here. In that case, should the bears maintain control, we may see the index, the US 500, the S&P 500 dropping, breaking the S1 4080 and start aiming for lower grounds. On the flip side, should there be additional confidence provided, then we may see the US dollar index rising, breaking the 4,135 and start aiming for the 4,195. Last US index, Nasdaq. Okay, Nasdaq was on the rise. Okay, let's correct the labels. Definitely we have to go hunting for a new ultimate resistance line. One, two, three, 4 touches. That seems to be valid. I'm keeping that. And that's the in red. $14,290. Yep. Readjusting the chart. sorry, my bad. Start with the S3, let's reposition them as well. Starting with the S3, which is now being placed at 12,520. The S2 at 12,850. The S1 at 13,145. The R1 at 13,400. And the R2 at sorry, 13,730. The R3 now is being placed at 14,000. Give me a sec. 230. So we have set our levels. The R3 is a little bit off, but we saw how exactly there was a steep upward movement there, which didn't allow for mid levels, but still it's a possibility. For the time being, we tend to maintain a bias for the sideways motion to continue between the R1 13,400 and the S1 13,145. In case of a bullish outlook, I wouldn't be surprised to see the price action of Nasdaq rising, breaking the R1 13,400 and start aiming for the R2 13,730. Sorry. On the other hand, should the bears be in charge, I would require nothing less than, for a bearish outlook, that the price action drops below the S1 and starts aiming for the S2 12,850. Let's have a look also at oil prices. Okay, this definitely goes down. Could go here. Taking it in. Let's correct also the content of the labels. So the R1 is being placed at $80.90. The R2 at $76.80 and the R1 at $73.90. Then we move on to the support lines, starting with the S1 at 69.10, the S2 at 64.30. Note how beautifully it was able to reverse the downward motion of the commodity price practically mid-March. While even lower, we note the S3 61.70. For the time being, we tend to maintain a bias for the upward movement to be maintained, but to tell you the truth, guys, the slight bearish movement of the late Asian to this European session is an issue. I would like to examine it before moving on. So we have here an upward trend line, but that has been interrupted. On the other hand, though, we still have downward movement. So definitely the upward movement was interrupted, hence any bullish outlook for the time being has to be cancelled. Should the price action remain rather stable, I would expect it to remain just below the 73.90 resistance line, maybe even revolving around it. On the other hand, note how strong the downward motion was since the beginning of February, all this movement downwards, and that tends to imply a rather bearish outlook, given also the downward trend line. But for a bearish outlook, we would require the pair to break below the S1 69.10 and start aiming for low grounds. Okay, let's more or less discuss the possibility of an upward motion. Okay, definitely for any upward motion, the price action of oil, of WTI, has to firstly break above the 73.90 resistance line and start aiming for the R2 76.80 resistance level. That would allow us practically to redraw the upward movement and show its limitations. On the other hand, should we see the bears taking over, we may see WTI's price dropping from 73.9 to the S1 69.10, if not even lower. The RSI indicator below our 4-hour chart is dropping, nearing the reading of 50. It's actually right now at 55.3, implying a rather, I would say, indecisive market, but definitely a less bullish market, which could be allowing practically also for the price action of WTI to drop even further. Okay, I had some requests from you guys. You're asking us to have a look at USD Quite interesting pair. I think we had a new all-time high yesterday. Here it is. Nope, this is it. Okay, this is the forward chart. I don't know if there's any sense in this anymore. But definitely the pair has broken all resistance lines and tends to maintain a clear-cut upward motion, despite some interruption the past 2 days. So I maintain my bullish outlook intact and expect the pair to reach new record high levels. Let's have a look also at Euro CHF. That was another request of you guys. Let's reposition the labels. Actually, we're going to have to correct them. Okay, let's go hunting for a new ultimate support line. Going back. See these resistance lines here? Quite interesting. Especially given that we have some support here. Keeping this. At 0.9580. Locked it in. Let's also change the color of the first resistance line. Readjusting the chart. Sorry. Let's color this in red, exactly to reflect the fact that it's a resistance line now, given that the price action has moved below it. Starting with the R3, which is now being placed at 0.9950. The R2 at 0.9880. The R1 at 0.98. The S1 at 0.9740. The S2 at 0.9655. And the S3, which is being placed at 0.9580. Let me confirm this. Yep, 95.80. So we tend to maintain a bias for the sideways motion to be maintained of the pair for the time being. It's a very interesting pair in the sense that we have most probably some diverging multi-policy outlooks here, which may be providing some support for the euro. And that could provide some boost to the pair breaking, allowing to break once again above the 0.98 resistance line. So that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello everyone and welcome to another educational video. In this video we look at the three main US stock market indexes. The S&P 500, Dow Jones Industrial Average and Nasdaq Composite are the three most widely followed indexes in the US. The S&P 500 is an index with 500 of the top companies in the US. This index represents approximately 80% of the total value of the US stock market. Generally, the S&P 500 index gives a good indication of movement of the overall US market. The S&P 500 index is a market-weighted index, so basically every stock in the index is represented in proportion to its total market capitalization. This means that if the total market value of the 500 companies in the S&P 500 falls by 10%, the value of the index also falls by 10%. The Dow Jones Industrial Average is one of the most well-known and most frequently used indexes in the world. It includes the stocks of 30 of the largest and most important companies in the United States. The DJIA is a price-weighted index and represents about a quarter of the value of the entire US stock market. In general, the Dow is known for its listing of the best blue-chip companies. The Nasdaq Composite Index is a market capitalization weighted index of all the stocks traded on the Nasdaq Stock Exchange. The technology sector accounts for just over half the index, more than 3 times the index weight of any other market sector. In addition to these 3 indexes, there are about another 5,000 that make up the US equity market. Hope you found our video interesting. Thank you for watching.
Further ado, I'm just going to introduce to you the topic for today, gold trading. It'll be a gold trading strategy. Remember, the disclaimer is that everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. Okay, guys, I just want to see if where's my video? My video's here. Yeah, nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade. Okay. Now. All right. So I'll be introducing to you your host for today. Her name is Peggy. Right. So she has she's the newest member of the team here, right? Teaching you guys not only the live trading sessions, but also today's session, which is her own personal trading strategy. It's called a gold trading strategy, right? So she has passed multiple prop trading tests, right? Even more than me. Right, she has done it really well. She's part of the team here, which we are finalists for the best FX and best equity research in 2019, 2020, and 2021. Right, so she clearly has a really good strategy that has worked multiple times through the years. Right, I want to encourage you to take the time to ask her, as she explains it. Right, she explains it. Take the time to ask her. For the first half of this webinar, she'll be doing it. After that, about 20 to 30 minutes later, we'll be passing on the time to another member. His name is Keaton, right? He'll be sharing with you the fundamentals when it comes to trading gold, right? Because it's not only, you don't only look at the technicals when you're trading, right? It's important to look at the fundamentals too, all right? So you'll be blessed with the knowledge of 2 really good speakers today, right? So have fun, right? I encourage you guys to ask questions when you can, right? We literally have another screen open here to monitor the questions that come through. All right. Peggy, do you need trading view? Okay, just let me open trading view for you. Chart. So okay, so I'm opening trading view here in case later, right? We're going to refer a bit to trading view. Peggy, okay. But anyway, I'll pass on the time to you first. Okay, so if you want to open it, just click on. Not this one, just close this off. Yeah, it will show over here. Okay. All right. Now I'll pass the time on to you, Peggy. Right. Have fun. Careful on triple this thing.
Hi everyone. Good morning, good afternoon, wherever you are. How you guys doing? All right. Okay. Today I'm going to share with you guys about my gold trading strategies. Okay. Let me pull out the chart. All right. I think I did some bookmark here just for you guys to easy to understand. So actually my strategy, I'm only using EMA 100 and 200. So my EMA 200 is a blue color and EMA 100 is a green color. Okay. Okay, let me show you the example why I enter the trade. Okay, for example, let me see. Okay, usually I will scalp, so I will look at H1, and then I will enter the trade in M1. Okay, so I go to H1 time frame. Okay, I just do some bookmark here. For example, okay, I want to sell from here. Okay, as you can see that this is a very big bearish candle, and then it's come from like resistance. You can see here. So when the H1 time frame close, I will go to M1. Okay, and then I wait for price to pull back, and then I will sell. Okay, I will show you. Okay, I will put a sell here. Okay, you see when it hits EMA 100 and 200 in M1, I will place the sell here. Okay, where I'm going to take my profit is gonna be here. Okay, you can see. Okay. Sometimes you can see that price is may reverse. So usually my lot size is pretty small. It could be 0.25, it could be 0.35 or 0.45, but it depends. I will put quite a number of number of trades like layer. It's called layer. So like I put here one, for example. Where is my like just now I put here, right? I might put somewhere here, maybe 3 order, and then I see that the price reverse here. I might put like 1 or 2 more here, and then I go back to M5. Okay, it's above EMA 100 and 200. It's okay. Okay, so after that I layer, and then I wait. You can see price coming down. Yep. Okay, then it hits my TP here. Okay, you can see here my first order I entry at about 1995, and that's my second one is about 1998. So my TP is about 1988. It's about almost 1000 point or 100 point here. Yeah, so this is how I scout my goal. Okay, let me know if you have any questions, so I try to answer you guys. Okay, this is one of the example. Okay. Um. Okay. Okay, I will try another. Do you use only H1? Yes. If I scarf, I only use H1, which is I will wait until the H1 candles stick close, and after that I will go to M1 to wait for the entry. Okay. All right. Oh, okay, no problem. So usually close, you go here, indicator. You can go here, moving average exponential, or it's called EMA. Okay, you can just click to. Okay, and after that, you go to here, the setting, input, the range you put 200. I always use EMA 200 in blue color, so easy for me. And then EMA 100, you change to 100. And then go style, you change to green color. Okay, how big the tick you can just like make it like slightly thicker. Okay. Okay. Okay, usually I only use these two EMA, And then for my RSI, I only use when I want to see like divergence, bearish divergence, or bullish divergence only. Okay. um. Okay. I have another example for you. Okay. Just now I'll sell. Okay. For example, if I want to buy, okay, from this one, for example. Okay. Like for this example, I want to buy. I saw that there's a very big candle here. How should we understand image green and blue light? Okay. Actually, the color of the EMA, you can choose by yourself. You can choose yellow, green. You can choose black color. It's up to you. But to me, I always use like EMA. I know if like blue line, I know it's EMA 200. If the green line, it's gonna be EMA 100. So it depends on you. If you like pink color, you can just use pink color. Up to you. Yeah. So to me, because I have been using, so I already remember. So my EMA blue color is 200, and then green color is EMA 100. Yeah, you can choose your own color. Yeah, doesn't matter. It's up to you. Okay. So you have to know how to release the candles stick as well. For this one, for example, if I want to buy, because I see that in H1 is all the candle is above EMA 100 and 200. Okay. And this one after 1 hour is closed. It closed with green color here. After close already, I will go to M1. So actually my strategy, you can scout like whole day, but you don't need to like on the computer all the time. You can just maybe after you place the trade, and then maybe end of the hour, you can just check like whether the candle is called with either red and green or green, and then is as support or resistance or not. Okay, you don't need to like look or staring at the charts for the whole day. But usually, if I take my like challenge, I can scout like whole day. Yeah. And no, I I I I don't trade by using strategy like EMA crossover. No, I did not. I only trade which is show you guys. Like for example, just now the green candle is closed with the candle is closed with the green candle. So after close already, I will go to M1, okay, to find the entry. No, it doesn't matter. It doesn't need to like cross over or anything. Okay, for example here, just now it closed already. You just have to wait for the price to come back, like pull back, and then you take the buy. Okay, I show you. Okay, I already enter from here. But sometimes you have to keep in mind, you don't need to like place the order like very big lot, because sometimes the price it may just reach at EMA 100, which is green color, but sometimes the price is could come down to EMA 200 as well. So you might need to like you spare your lot size to like layer below, because sometimes if you think, oh, this strategy I'm really confident, you put like 10 lot or 20 lot, right? But sometimes if reverse maybe 2 or 300 point, your pot is might gone already. So you have to manage your lot size as well. Okay, because sometimes it could come until like a blue line, which is EMA 200. So but this one is come until EMA 100. So I played the trade here, the order here. Okay, and then you would think that where I'm going to take the profit. Okay, to me, take profit, you can just take at the recently high, which is around 1893. Okay, and then you have a look here. Okay, and then here's our TP here. So from here we entered around 1887. It's go up to 1897. I think it's about 500 point, right? About 6 to 700 point or 60 pip or 70 pip, right? A lot, right? For example, like if you put only one lot, you already win like 6 to 700 USD per trade. Okay, after I close the position, that's it. I don't look at the chart anymore. I wait until end of the hours, and then I see again where is the candle or the price heading to. Yeah. But sometimes not every day that is a good day. Sometimes the trade may not go the direction as you think. You might have to either put the SL or you might have to cut loss, which is cut loss a little bit is okay. Have to keep that in mind as well. I show you another like buy already. Oh, okay. Okay, for like this is we're gonna get the SL here. Okay, I will show you the trade as well. Like if you can see from here, okay, we know that it's ending with the green color, right? Green candle, and then you think that price is might be around like support, right? And then we say, yeah, okay, our strategy we're going to buy, we wait to buy, right? So you go to M1. Okay, one of the thing you have to keep that in mind is that our strategy that we have to wait at EMA 100 and 200 and then we buy when the price is reverse, right? And then we're gonna take a trade from here. But if you look through EMA 100 and 200, the price and all the way below EMA 100 and 200. And then even you go to EMA M5, you can see that like the price between the indicator is very far away, so it's likely this one is gonna like the buy. Definitely this one we gonna get the SL. Okay, let's see. Okay, back to our strategy. So we say that okay, if price go up to EMA 100 and 200, we gonna sell. Okay, it touched already. One is I sell here. Oh, I buy here. Sorry, I'm gonna buy here, right? Because it's ending with green color, candle. Okay, I'm gonna buy. Okay, after you buy, it's already actually from like this price is around 1821. It's go up to 18 like 23. It's only about 200 point or 20 pip, right? And then you don't want to close the trade because you think that your TP is gonna be here. You want to get a TP here. Okay, and then you hold. Okay, you hold the position, and then the price keep coming down. Where is our SL? Your SL you just put here. So it's from 1821 to here it's about 500 point. Or if you put one lot, you will lose about 500 US dollar. Okay, you hold. You don't want to close, so you hold. Okay, and then this trade you're gonna hit our SL, and then you can see why the price, you see why the price is like not reverse as is ending with the H1 candle. This one, if you trade for a long time, you tend to kind of like observe that when the price is below MA 100 and 200, even like M1 and M5, and then it really far away like this, is downtrend. Okay, so if I see like that, I don't put the trade. I will just, okay, this hour I see already, I don't put the trade, so I wait for another hour for another one more hour. Okay, so this trade we hit SL. Okay, even those like we enter just now around here. Okay, the price is shoot up. It's about 200 point. You didn't close because you think that you want to go until like hit your TP, but after that the price is reversed. One of the thing that if you quick enough, you can like put your SL or maybe remove move your SL to break even. Okay, so when the price reverse, right, you're not gonna lose anything if you quick enough. Okay, because to me I'm scout, so I have my like EA for like close all position in one click, and then I also have a EA for like set my TP and SL in one in like at once, so I don't need to kind of adjust one by one because usually I put my order is like could be 10 order, but 10 order, but my lot size is about 0.25 0.35. Okay, this one we lose the trade. Yep. And then maybe at home you can try to get EMA 100 and 200, and then you observe how is especially in gold it really respect EMA 100 and 200 very nicely. I will show you one more. Okay, for example this one I show you already. Okay, maybe this one. Okay, one more is like you can see that this one is very big and you can say like engulfing bearish engulfing candle, right? You can see very big one, and then you know that it come from resistance, so the next hour you're gonna sell. Okay, so we go to M1, and you can see that when you go to M1 you can see that price is already below EMA, so we want to sell. Okay, but just now price is we want to buy but price is below EMA 100 and 200, so that's why it's his SL. Okay, even though you go to M5 you can see price also below EMA 100 and 200 in M5. Yes, we want to sell, so we wait for the pullback or reverse. You can see okay, first one I will place the trade here, and after that I will layer when the price go up around this like area. I will put a few order here. Okay, okay, so my TP is recently low here. Okay, then hits our TP already, so our TP is around 1974, and then we enters about 1978, so it's about 400 point. Yeah, and then that's it. You close the position, you can go and do whatever you want, drink coffee, enjoy your life, and at the end of the hour you just come and see again, because sometimes I trade by using only my phone. Okay, I don't need to like be in the committee all the time. So sometimes if you lost, you lose the trade, you tell yourself it's okay, like you learn something, right? And then you know that okay, next time you're not gonna do again. And then yeah, and one is like you need to manage your lot size as well, so you don't have to put like 5 lot 10 lot because you're really confident. But if your pot is really big, you can, no problem, you can earn a lot as well. So it's up to you guys. Okay, this is how I trade gold scalping. For example, like every time you scalp about 3 to 500 point. Let's say if you put one lot, you earn about 3 to 500, like like maybe per trade, right? And then maybe one day you trade for five times, you can earn only 1.5k USD per day. I think that is all good enough already. Don't need to be guilty, because we can trade like every day, because you know how to earn the money, right? Okay, this is one, and let's see if I can find like another one. Okay, after 1 hour analysis, we should wait for retrace or pullback on it. Yes, correct. yeah, you have to wait either like retest or pull back on EMA 100 and 200 M1, but then you have to see also whether like the candle it come from support or any resistance. If come from support resistance big with very big engulfing, bullet engulfing or belly engulfing, and then you can say 99% based on my experience, yeah, you win that the trade. But sometimes anything possible, so you have to put your SL every time you trade. Okay, you just it's up to you how much is your pot, because sometimes you can just say okay, maybe this trade I can lose like maybe 1000 or 500, and then you just adjust your lot size accordingly to your pot size, because sometimes they might have like a new came out from somewhere, which is yesterday um you can see gold is go up a lot, right? I think because yesterday have like USD new, and then they also have like war. It's about Finland. They're joining the Russia, right? There's a war. That's as well. That's why all the gold is shoot up. Okay, and now gold is coming down. I I think this one I have sell from this resistance. I still hold my trade from this one. Okay. This one I put a trade because I just saw that price is at already as resistance, and then in M1 sorry, in H1 there's quite like a big rejection from here, so I just put the trade here, but my lot size is only put one lot. Okay, and then my SI is 1000 point. Yeah, my TP is about 1819 sorry 2019. That's my TP for the trade. Okay, let me show you one more. Okay, this one I show you already. This one we lost this trade. How many I show you guys already? But never mind. Okay, for example, this one. Okay, this one you see that there is very big bearish candle, and then it's come from resistance. Okay, so here we go to M1. You always see the same pattern here. Already price below EMA 100 and 200 M1, even at M5 price is already break below, so we wait for them to pull back. Okay, and then you see, let me see. Okay, I think this one you may not call the trade here because the price is not reach EMA 100 and 200. Okay, sometime price is may go close. Okay, if you think that you want to put the trade, you can just put like small lot size here, because its price is only come around this, like this. Okay, not even like close, then you might miss the trade because you think that okay, price haven't reached EMA 100 and 200, right? But actually, you can see that price is come around this one and then all the way down. So this one, you might miss the trade. Okay, if price go until like that, okay, you don't trade when the price is revert here and then you sell. Okay, because that mean price is really go down a lot. Usually end of H1, the beginning of like the next hour, price should have like pull back or reverse, and then we will take the sale from there. But if like the beginning of the hour, the price is all the way down like this, you don't put the trade. Okay, because based on my experience, when the price is reversed here and then you put the trade, usually it will go up, reverse a lot. So you better don't put the trade here. You just wait for the next hour and then you put the trade. Gold is now near 80h, so not many support resistance. Like it's good to try to scalp right now. I do okay. Just now I do scalp. I hold my it's eh oh sorry, I thought like why is coming out a lot. Okay, I hold my loss like positions in the beginning here. Okay, about 2x just now, and then I close at 221 2121 2122 around here. I close one like one orders already, and then now I've scalped because I saw that price is ending with like red candle. So just now I wait at M1, and then I place the trades around here. My first order is around 22023 because it go here, right? It's here, and then it's reversed up until here. So I layer. Okay, so my loss size it's around 0.28. I put about five orders, so it's about total is about almost 2 lot. Yeah. And then here, yeah, and then I sell. Okay. Yeah. So I sell, and then my TP is at 2023. I think it's already hit my TP. This is my second order. Yeah. So to me, because now they have a major new or war, so I try to kind of like secure my profit, and then that's it. End of the day, it's my reverse. Yeah. That's how I scalp. Okay, so now let me know if you have any question, because if not, I'm going to pass to my colleague. So he gonna run through all the fundamental. Yeah, anything you can ask him, because if you trade gold, I do look at the fundamental as well. Usually I just use Forex Factory, only the website to look if there is any news about USD. Okay. Thank you so much, guys. Let me know if you have any question. If not, I will pass through to my colleague now. I do trade on new, but after the new release. Yes, I do. But just after the new release. Like, for example, if like the USD, the new came out is yesterday it's red, so meaning that the gold will go up. Yeah, just buy. Yeah, I do trade, but after the new release. Okay, but my lot size is very small. What pity for gold? Is it going to go up higher? Okay, for the fundamental, I think later you ask my colleague. He can give you some idea what to expect about gold later. Okay, thank you so much, guys. Okay, I will pass to my colleague. His name is Ketan here.
Okay, hi everyone. My name is Ketan, so I'll just take over the fundamental part of the presentation. All right, okay, so I'll just bring it over to my slides. Okay, okay, so here we are. Okay, so it's full screen now. Okay, guys. Okay, so here we are. So okay, Peggy has covered all the technical analysis portion of with regards to gold. So I'll be speaking to you guys about the fundamental aspects and what to look out for. Okay, so this is just a quick overview of which are the major sectors that uses gold. So we obviously have jewelry, investment, central banks, technology. So jewelry takes up 55% of the market. Investment is 25%. So this relates to hedge funds, financial institutions, and retail traders buying gold ETFs, gold instruments, gold futures, and also physical gold. Yeah, physical gold and gold coins, and then central banks also, which buying physical gold as well, and technology which is used for example, printed circuit boards. So all the conductors on printed circuit boards use gold as it's a very good conductor of electricity. Okay, so just a quick one. Okay, so let's talk about gold demand in 2022. Okay, 2022, there were a lot of key events that took place, and one of them naturally was the uh, Russia invading Ukraine. So there was a major geopolitical event which uh, which caused a lot of central banks and investors to buy gold. Okay, so what we are looking at here in this chart, right? Okay, where's my mouse? Okay, right. Okay, you can see my mouse as well. Okay, so this chart is from the World Gold Council, right? Okay, so it's showing us illustrating the global gold demand from 2010 to 2022. So uh 2020 was actually like the lowest demand for gold in the last 10 years or so. And after that, gold has actually started, well, demand for gold has started to pick up across all the segments, as we can see: jewelry, fabrication, technology, total bar and coin, which is physical gold, and ETFs and similar products. And this one in, I guess I would call this pink, central banks and other institutions. So as you can see here, this pinkish square, this is the purchasing by central banks. So as you can see, since 2022, it has increased pretty significantly, right? This is due to a combination of central banks buying gold as an inflation hedge. As we've all known, 2022 was the year of inflation as well, with goods and services, commodities, all rising pretty high, utility costs, energy costs all rising. So central banks were buying gold as a hedge against inflation, and also uh, as a hedge against devaluation of their respective currencies. Okay, so here we just take a quick look at gold reserves. So the United States has the largest gold reserves, followed by Germany and Italy's. Okay, just a quick overview on gold production, right? Okay, so this is for 2022. So as you can see, China, Australia, and Russia are the leading producers of gold, together followed by Canada and United States. So this is important because as sanctions are imposed on Russia with regards to natural gas, oil, and other commodities and gold, including gold. So you can see all these sanctions have caused the price of commodities to spike, at least in the first half of 2022 in general. Yeah. Okay. Gold versus real rates. Okay. This is a chart that I like to uh, would like to describe in detail to you guys, because this is what helps me guide the direction of gold on a larger time frame. Okay, so what we're looking at here is the chart between showing the price of gold with respect to real rates. Okay, so the price of gold is in yellow and real rates are in black. Okay, so what are real rates? So real rates is actually the 10-year treasury bond yield adjusted for inflation. Okay, so if you look at a nominal 10-year bond yield, it will yield a figure, and then that figure is adjusted for inflation, which will give us this real yield here. So what's important to note about this axis is this is an inverted axis versus the goal. So the reason it is inverted, it is to show that it is to clearly illustrate the correlation between goal and real rates. So you can see here gold price is from y-axis from $1,000 to 2,000. Real yields is inverted, so it goes from positive 1.6% to negative 1.6%. Right? Okay. So this chart is showing us the history of the last 10 years, right? Okay, so you can see the close relation between gold is and between gold and real rates. Of course, it's not 100% correlation, but the correlation is tight enough for us to determine what is the direction of growth of gold, right? So clearly we can see here. Okay, there's also periods where the correlation doesn't uh, is not as tight as we would expect it to be. So that's where we just have to be a bit careful. So between 2014 to 2016, although real rates were becoming less negative, less positive, so going from 0.8 positive 0.8 heading towards zero, gold was actually uh, coming down. Whereas from 2016 onwards, the correlation really began to tighten. So as real rates peaked at positive 0.8% and started falling towards 0%, meaning that they were becoming less positive and heading more towards negative territory, gold price started to rise. Now, this is because as real, as real rates become less positive, heading to neutral and finally negative, this implies that gold in this type of environment where real rates are becoming less positive and more negative, gold serves as a better hedge against inflation. So this is when investors, central banks, and other players will start to buy gold. Okay, so the real one of the real fundamental reasons for gold prices to rise is that it acts as a hedge against inflation, but under certain scenarios, right? And that scenario is when real yields start becoming more negative, or they become less positive in this case, and finally they may even break into negative uh, territory. And so as you can see from 2016 onwards, the correlation is pretty tight. So when the real yield hit 0% and started increasing to become more positive, that's when gold started to retreat as well. So the basic takeaway is as real rates become less positive and more negative, gold prices increase. And conversely, as real rates move from negative to neutral to more positive territory, gold prices drop. So in this scenario here, you can see the correlation is pretty tight and things really took off in about 2019. So real rates peaked at about, I would say probably 1.2% here. And then they started falling pretty drastically all the way to 0%. And at the same time, gold prices bottomed at about 1,200 and made a uh, steady climb all the way up to 1,500 before pulling back for a bit together with real rates and then moving up again. And of course, we had the pandemic uh, lockdowns and crisis going on in early 2020, and there was a big volatility in across all markets, right? Across all asset classes, bonds, equities, precious metals, and currencies. So during this phase, you can see that gold and real rates also were very tightly correlated. So as real rates move into deeper into negative territory, so did the price of gold rise up in tandem. And it's been pretty much moving together in tandem all the way till here. So what happened in 2022, despite the geopolitical event of Russia invading Ukraine, which sparked a demand for gold moving because it's a major geopolitical event and gold serves as a safe haven. That's why we had a big spike in the price of gold at the start of 2022. But surprisingly, after that, why did gold prices collapse? Despite the a major geopolitical risk event taking place, gold prices actually started to pull back after. This is because it can be explained by real rates. So this is the macro environment that we were currently in, or that we were in 2022. So after gold prices peaked, real rates started increasing. So this happened as central banks around the world started raising interest rates to combat inflation. So as interest rates rise, real yields were also rising. So as real yields move from a negative territory to neutral and finally into positive territory, the price of gold followed suit and actually dropped pretty significantly as well. And then after that, real rates have been fluctuating up and down, and gold prices have rebounded. So there's a bit of disconnect here, and some of it can also be attributed to central banks buying gold, as we saw in the chart earlier. In 2022, central banks actually played a significant part in buying physical gold. They were actually a big player for uh, for buying gold, and a lot of demand came from them. So, thus, one of the reasons why uh, gold prices rose despite real yields just fluctuating up and down around here for, is due to gold central banks buying gold. Okay, now we'll compare two charts. So we know that real rates, bond yields, and the dollar, the strength of the US dollar affects the price of gold, right? So what we have here is a chart of the US 10-year bond yield with the instrument XAU USD. Okay, just to note that this bond yield is giving the nominal bond yield. So that is to say that the yield that you see here, 3.35% up to 4%, 2%, these are nominal yields which are not um, adjusted for inflation. Whereas on this previous chart here, the line in black is illustrating the 10-year bond yield, which has been adjusted for inflation. Okay, so just take note of that. So as mentioned earlier, so this was when we had the Russian invasion, the geopolitical event of Russia invading Ukraine, and we saw gold spike up, breaking $2,000 for the first time in almost since middle of 2020. So this was a major geopolitical event that caused the price of gold to spike. And then because of inflation as well, as inflation started to rise uh, pretty pretty sharply, central banks around the world, led by the Federal Reserve, were aggressively raising interest rates as well. So as interest rates are hiked or increased, the government bond yields will follow suit as well. So the US 10-year bond yield started rising pretty sharply from about 1.5, 1.8% quickly to about maybe just closer to 3% here. And at the same time, the dollar index was also rising. So that is to say, the dollar index was rising in tandem with the 10-year bond yield, uh, which actually made real rates become more negative. So with a strong dollar and rising bond yields, the price of gold actually started pulling back pretty sharply, as you can see here. So this is the macro environment that we were in 2022, at least for the uh, first half to the third quarter, right? So this explains why the price of gold actually pulled back sharply despite a major geopolitical event taking place. So what happened? So as you can see, our yields pull back. Every time yields pull back here and here, the dollar also pulled back together. And that's when we had some relief rallies in the price of gold as well, right? So if you're able to identify, or if you were to track the 10-year bond yield and the US dollar and use that as a guide to see where they are heading together, it will give you a good indicator of what we can expect for uh, the price of gold. Yeah. So essentially, in the third quarter of 2022, that's when bond yields peaked and the dollar index peaked as well, roughly. At the same time, they both started to pull back. So bond yields were falling, the dollar index was falling, and thus uh, prices for gold bottomed and started rising sharply. So in this environment, we had real rates becoming more negative, and thus as they became more negative, the price of gold started to increase as well, together with central banks who are purchasing um, large amounts of gold as well. So, and this relationship has followed suit pretty tightly. So, as you can see here, we had yields starting to rise here together with the dollar index, and at the same time, gold started to, I would say, probably consolidate. And as yields started to fall, dollar index started to fall, gold pushed up again. Similarly, they fell. Gold prices fell as bond yields and dollar index pushed up. So similarly, if we look at the chart of the DXI versus gold, that relationship is illustrated quite clearly. So as you can see here, we have a very strong US dollar rising. What this is due to central banks, especially the Federal Reserve, raising interest rates very aggressively, which caused bond yields to rise, which caused the US dollar to rise as well. So this was a period where not only for it's not only you can trade gold, but you can also identify periods where the US dollar was gaining strength across probably almost every major currency pair. And at the same time, this was negatively impacting the price of gold till the dollar index peaked together with bond yields. And the dollar index actually has really dropped off uh, pretty sharply from its peak. So that means to say it has lost strength against all of its major, or actually against all of its uh, major currency pairs. And at the same time, with falling yields, this has caused uh, gold prices to rise as well. And similarly, just at the start of 2023, when we saw the dollar index bottom at about 101 and start to rise together with bond yields, we saw this pullback in gold as well. And of course, together with the banking crisis with in the US in the regional banks with what is it? Yeah, Signature Bank and Silicon Valley Bank, plus the um, banking crisis in Switzerland as well. Uh, Gold also became a safe haven asset when investors piled into. So as you can see, there was another event here taking place as well in March, middle of March, with the regional banking crisis in the US, together with falling bond yields, falling dollar index, which has actually provided the catalyst for gold to rise again. So moving forward, as bond yields, we expect the dollar index to continue falling. We expect bond yields also to fall. So that should help prop up the price of gold. Naturally, of course, nothing moves up or down in a straight line. There will always be pullbacks to the downside. There'll be pullbacks to the upside. But by looking at what the US Federal Reserve is doing in terms of its hiking cycle, so its monetary policy, looking at how aggressive they are with raising rates or they're pausing, and then tracking the price of DXY and also checking the direction of bond yields will help to identify trading opportunities for gold. So these are all on weekly charts, but of course, depending on your trading style and strategy, you can scale all of this down to a daily time frame, 4 hourly time frame, or um, in a 1 hour time frame. So this is how you can use the macro environment to determine uh, whether there is demand for gold or not. So I guess the key takeaway here is to look at what central banks are doing in terms of actually, especially the Federal Reserve, what they're doing in terms of monetary policy. Are they still aggressive? Are they tapering down? So as you can see, the last rate hike by the Fed, they only raised 25 basis points. So they seem to be pulling back and becoming less aggressive. And at the same time, we've uh, seen that being reflected in the price of the dollar index and the direction of the bond yield as well. So when you can expect that um, the Federal Reserve is going to be less hawkish, we can probably say that bond yields are likely to fall further. The dollar index is likely to fall further, which means that real rates are becoming less positive and perhaps more negative. And then that would be a scenario where gold is in demand and will move up as well. Right. So that is what I have today for on the macro or the fundamental aspect of gold. So if there are any questions, yeah, feel free to answer. Feel free to type and ask away. Right. Okay. Okay, I'll just give 1 or 2 minutes and see if there's any takeaway or any questions for gold. Okay. Okay. Right. Okay. Okay. Right. I don't see any questions coming in. So, all right. Thank you everyone for your time, and I hope this has been any prediction the price will go up. Right. Okay. Given the current macro environment, it does seem that gold will remain elevated and is likely to move higher from here. But of course, you would have please do your own due diligence, be it in terms of fundamental analysis and technical analysis. But just my personal opinion now, gold is likely to stay elevated and could be pushed higher as well, especially if the dollar index continues to fall, especially if bond yields start to fall. Right. Okay. There's a question here. Will there be a recording of this webinar that we can access? Okay. I think so. Just let me confirm. Just give me a second while I confirm. Hang on.